All right, just to be respectful of everyone's time, we'll go ahead and get started. Good afternoon. My name's Chris Holland. I'm a business development specialist with Greater Nevada Credit Union. Joining me are my teammates, Saray and Leslie and Stephanie and Valerie. We're all here for you. Thank you for joining us on this recorded presentation. And we'd like you to please put yourselves on mute until the question and answer session, and we'll have a few of those throughout the time here today. Greater Nevada is finding a growing need for financial education from our community members. So each month we'll be showcasing a financial topic that we hope will help our community move towards financial wellness. So if you're interested in learning more about these webinars, check out our website at gncu.org and search for the Greater Financial Wellness Hub. Today's presentation is on debt management. I'd like to introduce your presenter, B. Pico. B's been a mortgage professional for over 6 years and is an expert in all your home lending needs. B will give you knowledge and expertise to help you guide you through the loan process and find terms that are right for your budget. And she's going to be talking through debt management today. She's lived in Northern Nevada for over 20 years, has a degree in business management from Western Nevada College, and loves spending time with her beautiful daughter and son. B, thank you so much for being here. I know we've had you here on mortgage talks in the past, and today you're going to talk about debt management.
Yes, thank you so much for that introduction, Chris. That was amazing. So let's get right into it. Let's get into our debt management presentation. So in this workshop, we are going to explain common reasons why people find themselves in debt, the most common types of debt, the value of using debt management strategies such as loan consolidation, budgeting, and debt management plans. We're also going to compare various debt management solutions. Alrighty, so let's get into the reality of debt. The average household debt is about $140,000, while the median is $65,000. Those are super scary numbers. Over 75% of all American adults are in debt. And if you're like me, wondering what the silent generation is, it is the people born before the baby boomers. So anywhere from mid-1920s to mid-1940s. Next, we'll talk a little bit about the price of high debt. Debt can be pricey in many forms. It can cause you to feel physically ill because of the amount of worrying you could be doing. It could also take a toll on your relationships. 21% of people say that debt has caused tension with their partners. Also, being in debt and or not having enough savings can make it difficult to pay for emergencies that might come up. Medical expenses are super pricey and it can be overwhelming. Millennials are also putting off huge events like buying homes or saving for retirements because of the debt. Next, let's explore some signs of debt distress. Some signs of debt distress are paying only the minimum due on your credit card accounts, using payday loans, being over the limit on one or more lines of credit, delaying medical and dental visits because you don't have enough cash to pay for them, using credit cards to pay for living expenses, using the overdraft protection plan on your checking account to pay monthly bills, using savings to pay bills, using one credit card to pay another, and delaying one bill or floating to pay another overdue bill. We now know the signs of debt distress, but what kinds of debts are there? There are two different types of debts or credit types out there. The first is a fixed credit. Fixed credit is going to be your mortgage loans, student loans, and car loans. You will notice that the important word is loan. Fixed credit will have a fixed monthly payment that is set up to pay off that debt in a certain amount of time. For example, an auto loan. It is fixed for 5 to 6 years with the same monthly payment to get the full loan paid off in that amount of time. The second is revolving credit. Revolving credit is your credit cards and lines of credits. These can be used for an indefinite amount of time. You can borrow and pay it back on a monthly basis, and the credit is revolving and ready to be used once again after it's paid. These types of debts will come with a higher interest rate due to the fact that it's a higher risk for the creditor granting the funds. Any questions so far?
It doesn't look like we have anything that's come through email or chat yet, so we'll just let you keep going.
All righty, well, let's dive into budgeting. Fun word. So the way that we'd like to explain it is the 50-30-20 plan. It can help creating a budget plan fit for you. How you want to think about it is 50% is spent on items you need, 30% on items you want, and 20% of monthly income goes into your savings account or debt recovery plan. This type of budgeting will simplify living within your means. I do know it's a lot easier said than done, but it is a great roadmap and tool to help you reach financial success. Next, we'll be diving into savings and debt recovery. Since we have established that we should be saving around 20% of our income, let's talk about different options in allocating those funds. First, let's put some of that savings into an emergency fund account. We should aim to have about 3 to 6 months of our living expenses in this account, just in case any emergency were to arise. The second one is my favorite, maximizing your 401k plan. A lot of employers even match your 401k contributions up to a certain percentage. That's free money. Who doesn't love and want free money? Of course, paying down debts made it onto this list. The less debts you have, the more money you can save and use in the future for retirement or investments. But how can we save more money? The best two ways to save a bit more is cutting down expenses and or adding income. We all have those expenses that we really don't know why or what we're paying. For example, I went through my statements and found I had so many subscriptions I was paying for and was not using half of them. That was a simple one to go through and start canceling and freeing up money monthly. Eating out is a huge one in my family, and let's face it, with all the prices going up, eating out is tremendously expensive now. Adding more income is a bit harder than cutting expenses, but definitely can be done. You can add a second job or maybe hold a huge garage sale and tidy up and make money while you're doing it. Now that we went over a bit on how to save a little more or add more income, let's work on the debt that we already have. There are two debt repayment strategies. Both accomplish the same goal, but one might work best for you. The first method is the Avalanche Method. With this method, you will want to list the debts with the highest interest rates or highest balances and start chipping away at those first, but still maintaining the minimum payments on all your other debts. The second method is the exact opposite. You would list all your debts from the smallest to largest and start chipping away at those first. Again, still all maintaining the minimum payments on all the rest of your debts. Whichever option you choose accomplishes the same goal. It's just the way that you look at it. Now that we have talked about scenarios and items you should do, let's talk about the things you do not want to do. Closing out credit cards is a big no-no. I can totally understand by experience that once you pay off that high balance, high interest credit card, you want nothing to do with it again, and it can be tempting to keep it around. But as soon as you close out that credit card, you wipe out all that great payment history you had with that company. I would only recommend closing the credit cards if you are paying an annual or monthly fee to have that card. In that case, you are getting rid of unnecessary fees and freeing up more income. Please, please, please do your research about any debt settlement company you are thinking about working with. There are some companies out there that are great at what they do and will help you, but a lot of them are just looking for your money. So please do your research on what they will actually be helping you with, and if it fits your financial needs, please do it. The last bulletin really should say you can't hide from your creditors. They might as well be detectives with a badge because they're able to find you anywhere. Now let's talk a little bit about the things we should and can try to do with debtors. These items are all good ideas on what you can do with creditors. You can definitely give them a call and negotiate with them or even set up payment plans with them. Credit counseling is always a good idea. They can show you tips and tricks to deal with creditors. Consolidating credit is one of the best ideas. I'm a mortgage loan officer, so I see this on a daily basis. If you already own a home and had debt you want to get rid of, let's talk about either pulling cash out of your home by refinancing or a home equity line of credit. Either option is a great way to eat at those large and high interest debts. I have also seen where people have equity in their cars or even paid off cars and use that collateral to get a loan to pay off high interest debts. But what happens if you can't pay those debts? Many Americans are overwhelmed by debt, and let's face it, with prices of all of our goods and services rising, this will be a bigger issue for all of us. About 35% of adults with credit history have debt in collections owing an average of over $5,000. In 2019, there were more than 774,000 bankruptcies filed. But what are debt collections? Well, when an account is not paid or past due, it will get transferred to a debt collector. These collections and/or past due payments do stay on your credit for 7 years and sometimes longer. They do also have the option of suing you and garnishing your wages or putting liens on your property. They can also possibly foreclose or repossess if the loan is secured by a home or an auto. If you believe the debt isn't yours, you can definitely talk with a debt attorney. I have seen many cases where people have a common name and someone else's debt gets added to the wrong John Smith. You can also communicate in writing with each creditor, but please make sure you keep all your correspondence. Worst case scenario is bankruptcy. So let's talk a little bit about bankruptcy. There are two different types of bankruptcy. The first is a Chapter 7 BK. In a Chapter 7 BK, your income has to be below state minimum and is the best for people who don't have a lot of liquidable assets or properties. The process usually takes anywhere from 3 to 6 months to be completed. And please keep in mind that after the process is complete, the bankruptcy is now considered discharged. And that discharge date is what any creditor will go by if you want to start applying for new debt like home loans. After Chapter 13 bankruptcy, you will still be making payments on your debts. Think of it more as a payment plan. You do have to have enough income to be able to show that you can pay these debts. This type of BK is best for people who have a reliable source of income to pay debts in about 3 to 5 years. You can definitely rebuild credit after a BK, but it will take some time. Questions?
Yeah, thank you for all the questions coming in through the chat. B, let me work through some of these and get your insights on these. The first one is there a safe debt score as too low account-wise that counts against your credit score?
Repeat that one more time.
Is there a safe debt score that's too low account-wise that counts against your credit score? So maybe this person is just maybe asking about how to manage, maybe get a better credit score overall.
Okay. So yes, I mean, definitely with credit cards, you want to kind of keep them at a limit, right? So let's say you have $1,000 limit on your credit card. You technically don't want to go over 30% of your limit on any of your cards. Going over 30% of those limits will start to decrease your credit versus help your credit. So if you stay below 300 on a $1,000 limit card and make your payments on time every single month, you'll have a really good credit score.
Thank you for that. The next one is, how does medical debt interact with my overall credit debt profile?
So medical debt is a little bit of a gray territory right now. I do believe that they passed some type of new regulation that credit should be wiped out. But in mortgage eyes, for example, I've also done auto loans too, so I can speak for those as well. We don't look at them. They do decrease your credit, but we don't look at them in overall to approve you for a loan. A lot of us do have medical collections just because sometimes the doctor's office or the hospital doesn't even get a hold of us to pay for these debts and automatically send them to collections. So they don't get looked at when you're applying for a loan. They will decrease your credit a little bit, but they'll normally drop off and won't affect you getting approved for a loan.
Thank you. The next one, B, is I was considering a HELOC loan to pay off some debt. However, with recent interest rate increases, is this still a viable option?
It is a viable option, but it just really depends, right? It depends on your first mortgage. If your first mortgage has a high rate, then it might be better to refinance it and put it all in one so it's a fixed rate and it's a fixed payment. Our home equity lines of credit here at Greater Nevada are adjustable rates, but they're still amazing to pay off all your debt. You're going to have one payment and you're going to start eating away at those. You'll see your credit score jump up quite a bit once you pay off those credit cards. And then once rates drop again, because they will, we always go through a cycle of high rates, low rates, high rates, low rates. When that rate drops again, you refinance your first to put it all in together and keep one payment.
Great, thanks. Here's one that's sort of maybe a 2 or 3 part question. It says, should I work to increase my credit limits so my debt to income ratio is lower? And what are the risks? And should my credit be spread across multiple products, or is just one credit card okay?
So increasing your credit limits won't necessarily budge your debt to income ratio. To be honest with you, creditors don't even look at debt to income ratio. Like, it's just the person you're applying for the loan, but it doesn't affect your credit score at all. Nowhere on your credit report is your income in there. So yes, you do want to spread it around. You want to have credit cards and loans. You want to have unsecured and secured lines on your credit report to have a diversified credit score. It's going to help you get the highest credit score possible. So yes, having both will manage that, and you'll want to keep those credit cards low. I've seen a lot of people with many credit cards, just because, the older we get, the more credit cards we kind of get, and we just kind of forget about them. It doesn't really matter if you have a lot of them. It just depends on how you're using them.
Got it.
I think I answered all 3, correct?
I think you did.
Okay.
Yeah, I think you did. Here's thank you, Jenny, for doing a little more clarification from that first question. It looks like she's wanting to know how many accounts can be open to have a good credit score. Is there too many, or there's some, do you need to have more than one?
So definitely have more than one. There's really not a too many, right? Because like I just mentioned, the older we get, sometimes we just have more and more credit cards, maybe that we're just not using, sitting there at 0. But definitely you want to diversify your credit. So you do want to have more than one credit card, more than one loan, just paying on them monthly. No late payments, because late payments are so detrimental to your credit scores. So yeah, just have more than one credit card, maybe 2 to 3, a loan, and you're kind of set.
Thank you, B. All right, I think we got through that first batch of questions, so we'll let you continue on with your presentation.
Okay, I do believe the team's going to take over for the next slide, which is about EverFi. Sheree, are you there?
I think, Stephanie, did you want to speak on this one specifically?
Sorry, guys. Okay, so basically what we wanted to do was to let you all know that we do have additional resources. Saray usually does this. She does a great job of letting us know. And so EverFi, you can find this through Greater Nevada Credit Union. And sorry, I copied this, and of course now I can't find it. Where? So here, let's see, EverFi, you can also find value. It's our free financial education courses. These courses are about 5 to 10 minutes. You can click through the courses. You can complete it your own timeline. And just from the comfort of your own home, you can do this on your iPad, on your laptop. You can take care of that. So there's things like debt management, healthy financial habits, and emergency savings. What's our next slide? Or anything. So then we also have some more community resources, the National Foundation for Credit Counseling. Credit counseling has tons of information there. They talk about budgets, all kinds of stuff that you can always take a look at. Again, just lots of great information there. Balance is something that we have partnered with, and with Balance, it's again a financial fitness program. It's through Greater Nevada Credit Union. They have classes like 8 tips to help eliminate debt, 2 strategies for digging out of debt, know your rights when it comes to debt collection, downsizing your debt, getting out of debt. There's a video on that. Again, really just great information for us to be able to have. And then we've got the links there for Crash Course and EverFi, and we will be providing these to you as once we're done. And I think it comes in an email for you.
I believe so.
Yeah, thank you, Stephanie. B, I have another question, a couple that are still coming in through the chat. Can you please expand on what terms are when you're talking about loans, and what kinds of terms should we be looking for?
Terms are, for example, the year. So when you finance a vehicle, you could have a term of 5 years, 6 years, 7 years, 8 years now. With the prices of with the prices of cars going up, they have extended it up to 8 years. So that's your term. For a mortgage, you have terms as in 30 years, 20 years, 15 years, 10 years, 5 years. So that is the amount of time that you have to get that loan paid off. When a car loan and a mortgage loan, you'll have a fixed payment so that you can pay it off in that amount of time.
Great. And they ask,
really,
oh,
sorry,
go ahead.
and really the term that's best for your budget, right? So like if you are buying a vehicle and you want to keep the payment lower, you're obviously going to extend that term a little bit more. Same for a mortgage. If you want to keep that payment lower, you'll want to go for a 30-year versus a 10-year loan.
Great, thank you. The next one is, how can I use investments when dealing with debt, and how do they impact my credit?
Investments do not impact your credit at all. They are not reported onto your credit bureaus at all. Those are just saving plans for yourself in the future. Investments can be used to pay down debt. As example, you can either borrow money from investments and you're paying yourself interest back, or you can just do an automatic withdrawal out of your investments. But those get a little bit tricky because then taxes get involved. But yeah, you can definitely do a loan against your investment plans and pay yourself interest and pay off those debts.
Thank you. The next one is, I've heard of debt consolidation loans or using a personal loan for debt consolidation. If I cannot get approved for a personal loan, a debt consolidation loan, what are my other options for debt consolidation?
Yeah, so debt consolidation loans, like you said, is going to be a personal loan that you get 15,000 or whatever the case may be to pay off all credit cards. Do keep in mind though that personal loans will have a higher interest rate because of the fact that it's not secured by something, it's not backed up by something. So those usually do have higher rates. If you own a home, the best way to do it is a home equity line of credit or to refinance your home to pull money out that way. It's a fixed rate. Unless it's a HELOC, it's an adjustable rate. The other options would be, I just lost my train of thought. Cars. So I have done it in the past where, I have a paid off car. Maybe the value of the car is 5,000. I'll pull 4,000 out of that car to be able to pay off 2 credit cards or a credit card and have that fixed payment instead.
Thank you. This one says, fraud activity has increased, so we may all experience it at some point. If I experience identity theft, what should I do if it impacts debt in my name or my credit?
Stephanie, I think Stephanie or Sheree can answer this one. I do believe Greater Nevada Credit Union has a program where we can pay for identity theft protection. I think. Are they there?
I can jump on and kind of add to this. So, I mean, definitely a lot of, you are absolutely correct. Fraud activity has increased and it seems to always be increasing as we get more vigilance. So do the fraudsters. So we may experience it at one point. If you do experience identity theft, there's a couple things you can do because it can impact your name and it can impact your credit. As far as our first recommendation usually is to put a lock on your credit. You can actually go to each credit bureau and put a lock on it so you're notified anytime your credit is ran without your knowledge, or even so being it's not able to be ran and you would be notified if somebody's trying to. If you needed to, let's say, go shop for a car, you would then take this lock off by notifying the credit bureaus of which you put the lock on and let them know, hey, this is me. I'm ready to apply for the loan. Perfect. I've ran my credits, gone through, and then I can place that lock back on. That's a great way to combat this fraudulent activity and identity theft. Now, a lot of people, that's a great preventative. What happens if it's already happened? What happens if we've already had fraud? Now, this is an option as well, along with Greater Nevada Credit Union, as well as any financial institution you can go into. We can help you take steps to go through and do basically a report to claim fraud on your credit history. Just as you would as if you had fraud on your debit card or something like that, and you go in and do a dispute, you can dispute something on your credit. And another great resource that we recommend, and I swear we bring it up almost every single webinar, is I will post it in the chat right now. You can check your credit report. Now, it doesn't allow you or it doesn't give you access to your actual score, but it'll actually allow you to view what's on your report. And you can do this for free on this annualcreditreport.com. I know there's a ton of commercials for other ones, but this is the one that you can go to for a free report, see what's on there. And you can actually go to those credit bureaus and check your report. Sometimes there's a small fee for it, but we recommend even quarterly that you're checking on just to see. If we're not checking our activity, how do we know what's on there and what if there is something fraudulent? So I hope that adds quite a bit of insight and maybe some tools to that fraud question. And I will pass it back to you because I see a couple more questions coming through.
Yeah, one of those is when you're searching and checking on mortgage and auto loans, can that hurt your credit?
Yes, most definitely. The most popular one is auto loans, right? Because we go walk into our car dealership, we fall in love with a car, and they will send out your application to about 30 to 50 sometimes different financial institutions. Well, each one of those institutions is going to do a hard pull on your credit, meaning that by the time you leave with that new car, your credit score is going to be significantly down because of all those credit runs. So the best way to avoid that would be to go either into your credit union or your local bank and get pre-approved first. That way when you go to the car dealership, you take your pre-approval letter, you already know what you're pre-approved for, and you let them know, hey, this is who I'm going through. That way they don't have to keep checking your credit. They might have to check it once as the dealership, just because I know that they've had a lot of fraud going on too. So they might have to do their due diligence, but they won't be sending it out to 40 to 50 different types of financial institutions. Same thing with a mortgage. The mortgage is a little bit different, just because you do want a mortgage shop, right? This is a huge loan that you're getting. It's a huge deal. It's for 30 years. And our prices here in Reno Sparks are pretty high, right? So it's a huge purchase. So you do kind of want a mortgage shop to make sure that you're getting the best product for you. Each financial institution has different products, different loan types, different programs. So you do have a window of 2.5 weeks to be able to mortgage shop, where the first person that pulls your credit for a mortgage, after that for 2.5 weeks, that the other lenders will pull that same report so it doesn't hit your credit. So it does allow you to mortgage shop a little bit.
Yeah, thank you for that. This next one might be a good group thing too. You have Saray or Stephanie. The question is there someone that can walk me through getting out of debt? And I know from personal experience for me, I just happened to go to one of our branches when I first started working for Greater Nevada and visited with one of the branch managers, and she was able to help me and like create a simple spreadsheet for me to follow. But I don't know if anyone else has some great advice. I know we've got a lot of experts in all of our branches that you can go in there and have a free conversation.
Awesome. Thank you, Chris. I would love to add on to this. Coming from branch world, absolutely. This is what our people get very, very passionate about. Please come in, make that appointment, sit down with our people. Even if you don't have a membership with us, we can go through some of the things as B talked about. Are we seeing a lot of subscriptions that we can cut down on? Is there a loan that we can refinance and get you into a lower payment? Are there these things that we can cut down and just kind of morph to either just to help you consolidate your debt? Let's go over, does the snowball method or does the avalanche method work best for you? What options do we have? So of course, our branches are always a resource. Now, I do want to post, and I'll put this in the chat as well. Just as Stephanie said, all of these resources and links that I'm posting in the chat, I will be sending you a post follow-up email with all of this information and probably even more. so you don't have to frantically write these down or save tabs. Now, I just posted our Balance Financial Fitness program, as we spoke about on a couple slides ago. This is a completely free resource for you, your family. There's no membership needed. And this, not only does it offer our videos and articles and things like that, but on the other line is you can make an appointment for one-on-one financial counseling. And it does all over kinds of all different kinds of topics, but debt management is absolutely one that they can help you with. And I love to announce that it is reported and it is available in other languages. So Spanish as well as other languages. So absolutely use that. And I will post some other links on the note of that Stephanie mentioned from Balance, that a lot of the information that came in our presentation today is from, sorry, I don't know how well this is going to be posting on my side in the chat room right now. It looks a little crazy. But just as we mentioned, a lot of these resources that we use for these presentations are coming right from these free resources. So I did want to mention, I will be sending these to you, as well as our presentations are typically recorded. Most of our presentations are recorded and they're posted at a later date right on our website. And I will be sending that link to you as well. So I'm just so happy, but I hope that answers some of those questions with where do I start? Where do I go in? Chris, I'm so glad you
And-
had a good experience, because that is one of my favorite things.
Yeah,
You know
thank
what?
you.
It's Stephanie. Is one of the things I would add on to that too is definitely coming from branch world myself as a branch manager. When I was on that side, I did love having appointments with my members who just needed a little bit of guidance, and each person is going to be different. And so whether you just kind of need to look at what your situation is. So is your situation that you are prepping to buy your first home, or you own a home where that could be a resource? In that instance, if you are a homeowner that you do have some equity in your home, or you're looking to buy a home, you want to reach out to B, and she is able to help guide you and give you that best advice on things that you can do to start that home purchase. And maybe it is going to take you 6 months or a year, but at least you can get that expert advice based on what your specific needs are. But maybe you're in that case of you have credit issues and you just don't know where to start. So Saray had put the link to get your credit report. So annualcreditreport.com. First step is ordering your free credit report. It doesn't hit your credit scores, and it's a tool for you to be able to use. And then you can kind of see who has hit your credit, because you have, I mean, let's face it, there are times when we're in that world of we just have the worst credit ever. Where do we start? So taking that credit report with you to maybe see your branch manager, because you're not really buying a home at that point and you just want somebody to help you, to guide you. Or are you in that world of, we keep talking about a budget, but there's not enough money coming in to cover the bills that are going out? And that's where you can also use your the experts like Balance, or a branch manager, somebody within the branch, to be able to just help and guide you, because sometimes you just need someone to listen, and maybe they have a second set of eyes that can really assist you in being able to see something that you're missing. But we all understand that there are times right now, and we're all a little nervous about the economy. We understand that you just may not have enough income coming in to cover all of those other things. So those are just some things to kind of look at.
And just to
Thank you,
kind of add
Steph.
on to what Stephanie said, so if I do get a branch referral, you've already met with the branch manager, you're ready to buy a home, you're ready to refinance a home, and you come to me, we pull credit, we just see that you're just not ready yet, I will give you a step-by-step guide on how to get you ready and the time frame to get you ready. So, and I'll check in on you too. So so I'll check in and say, hey, remember this conversation? So yeah, definitely come to one of us so that we can figure out how to put you on a plan that's going to work for you.
Thank you for that, B and Stephanie. B, a couple more questions, and you sort of touched on this one a little bit, so maybe you can just expand on it. It says, if I don't have a house, is refinancing a car another way to pull money out to pay down debt?
Yes, in my banking career, I have definitely done that, and helped people do that. So if you do have a little bit of equity in your car, definitely walk into one of your credit union branches, and see if you're able to pull some money out. You might even be able to lower the rate on it so that the payment doesn't change very much, but you get some money out to pay some debts. That's definitely a way to go.
Great. And it looks like the last one is if I have that debt, let's see. If I have debt that's been sent to collections, how should I interact with that issue?
It's definitely you'll want to reach out to the creditors. You'll want to reach out to the collection agencies as well to figure out, hey, what do I need to do to get this off my credit? Is it even my debt? You'll want to get all your info and all your ducks in a row before you go out there and see what it is about, and then that way you can figure out how to fix it. Because if it's not your debt, then at that point you have to start trying to remove that collection off your credit report because it's not yours. If it is yours, then you can maybe set up a payment plan to get it off of your credit as well.
All right, thank you for that. And I think that might be, let me look in this chat if there's any last minute questions coming in. Saray's posting.
I'm just so glad. I will add on to that question of if I have debt that has been sent out collections, how should I interact with that issue? I love this question because I think it's very interesting. I did post a link there that did come from our balance once again of knowing your rights when it comes to debt collection. I think that's so important. Once you know a little bit behind that, you get the confidence on how to negotiate your debt when it did end up in collections. Now, my first recommendation is that, of course, as B just said, don't run from it. But what's a really interesting thing after that we've spoken about is once it's come to collections, sometimes at that point, you can negotiate it again, which is very, very interesting. Once it's in that collections phase, sometimes with the collections agencies, you can negotiate that debt down to a lower payment amount, which a lot of people aren't sure of. So I definitely recommend, again, I will send these resources of knowing your rights when it comes to debt collection a little bit more. But I love, love, love that topic because I think at that point, a lot of us feel exhausted when it's gotten to debt collection. But that is a point of which we've gained great, great power. So just kind of shifting our perspective, like I said, once you know the back end, a lot of it, you're going to gain a lot of confidence on how to tackle it. So yes, thank you for bringing that up. I highly recommend this. It's very interesting take on it. If you have Hulu, highly recommend. It's called Buffaloed, and it shows a definitely different insight, just as you said, to a collection industry. And I won't get too much into it, but absolutely highly recommend a little bit of an insight on how debt collections work from going from a financial institution to a collector. So thank you for throwing that in there. It's a great one.
Yeah, thank you, Saray. All right, that looks like we've exhausted all the questions in there, B. So thank you, and thank you all of you that have attended the Greater Financial Wellness Series for today. For those of you who would like more information from B, we'll be sending out, like Saray said, a follow-up email with that survey and B's contact information. And if you're interested in learning more about these webinars, check out our website at gncu.org and search Greater Financial Wellness Hub and share these links with your friends and family. We appreciate you all and look forward to the next one.